Morning, everyone. Welcome to another episode of the Crypto Hour. Today is Friday, the 12th of September. Okay, so there are lots of things they are interesting and they've gone on over the past few weeks. So we'll see what as usual what happened in the economy, what's coming in terms of imminent announcements and how that can affect the economy and crypto as well as part of it. Just to remind you that, obviously, the things that we always look at are the, inflation and labor market, because those are the two things that the Fed looks at to determine interest rates, because those are the two mandates. Okay, the two mandates are to keep inflation within a certain range and to keep the labor market working well. Okay, so they don't want people to be without a job. So whenever the labor market is weakening, then there is more pressure for them to ease the monetary conditions, or like lower interest rate and so on. And the market obviously watches what the Fed says and does all the time very carefully, so they can understand what the attitude is towards policy in the next few months. So let me start sharing my screen. So, okay, let me just go, sorry, not yet. Okay. Okay, so what happened this week? First of all, the most important thing that happened this week is something that is not even is not even here. Okay, because it's not really an announcement as such, but like they sorry, they were reviewing the NFP, the non-farm payroll numbers, revising the non-farm payroll numbers, and they have revised them down quite substantially. So with the latest revision, it's showing that over the first part of the year, the US has actually shed jobs, hasn't created jobs, but has actually have been shedding jobs on a month-by-month basis. Okay, and that has kind of spooked the markets a little bit. You might have noticed gold has done particularly well over the past few days, because there is an expectation of, the lower interest rates are, the better the less incentive there is for people to be away from gold in a way, because of yield. So as the yield goes down, gold becomes more shiny in a way. It's more exciting to hold, because people don't have to, the opportunity cost of owning gold is less with lower interest rates. So we had that revision. CPI numbers, so inflation numbers, were pretty much were a little bit higher, but there was pretty much in line with expectations. So they're gone up from 2.7% to 2.9%, exactly as the market expected. But the one thing is these unemployment claims. So this number was far above expectations. So we're talking about 263 against 235. Yeah. So that it's 28 is over 10% overshoot. Okay, so a significant difference from expectations. And this has been the highest number of new unemployment claims outside of recessionary period. Okay, so this is why this is serious. This is serious, and this is something that will demand. So it almost like this number here almost confirmed, together with the non-farm payrolls last week. Like I told you on Friday, that we would have this important announcement, and the revision we had this week almost pretty much confirmed the expectation that the US is going to lower interest rates at the next meeting, which is next week. And probably now there are expectations that we might even have 3 interest rate cuts this year. So we could have quarter point, half a point. So there are substantial odds now that this is what is going to happen. So that would be like a 1%, a whole 1% cut before the end of the year. Okay, so bear in mind the things that get influenced by interest rates, and so from one point of view, the banks are rebuilding their liquidity, so they are tightening the reins in a way of lending. So the liquidity is becoming less, and the Fed will then loosen the liquidity, the purse string, and so on, so that to counteract this thing. So the thinking is that from now until maybe towards the end of the year, there is still going to be pretty much like neutral or still be some monetary tightening happening, even with the lowering of interest rates. But from pretty much the end of the year onwards, there's going to be considerable then almost like a new phase, new wave of money printing. So the expectations are that there's going to be like a short-term boom in 2006, fueled by liquidity in risk assets. So again, could be stocks and shares, could be crypto is very, especially Bitcoin, is very susceptible to changes in liquidity. So that kind of like boom that we've been expecting to, the kind of the bull market could happen, could start now in the last quarter and really in the first quarter of 2026. Now, the first indication, as I said, is going to happen next week. Next week on Wednesday, 7 p.m. UK, so that's 2 p.m. New York time, is going to be the announcement of the interest rates. So as you can see here, the expectations is at the moment interest rates are 4.5%. The expectations are of a quarter 25 basis points cut to 4.25%. So we'll see what that number is. The expectation is 4.25, and I think it will be 4.25. But even more important is the statement that comes straight afterwards, because that's almost like the market gets to work straight away. So there is just to tell you, there are AI tools pointed at the president of the Fed when Jerome Powell, when he makes his statement, that analyze as he speaks every single word he says and translates it in good, bad, indifferent. Okay, and then that gets the automated trading bots taking action straight away. So that happens within seconds of him speaking. You see these things happen, because that's we know what happened because they announce what happens now. What he's saying is what is going to happen next month, in 2 months, in 3 months, in 6 months. Okay, and that's the big thing. That everybody looks that is trading the news in a way. They look at what he says very carefully and analyze the words he uses to understand what he really means. But next week is going to be fairly busy anyway. Not just in there. We got retail sales announced on Tuesday. On Wednesday, I already said about the US dollar, but also the Canadian dollar. I'm going to announce interest rates. I expect it to stay the same, but much lower at 2.75%. And the day after, the pound as well. So the pound probably, I wouldn't expect interest rates to go down, because the bond market is in turmoil at the moment. So very unlikely the interest rates to be cut at this moment. And on Friday, we even got the Japanese yen. So Canadian dollar, US dollar, pound, and yen, they're all announcing interest rates decisions next week. So pretty busy week from that point of view. Now, if we look at, let me show you a few things. Oops, sorry, let me go now. So this is the this was actually done before last week. Okay, so this is the US non-farm payrolls. Okay, and the actual revision was actually more than the estimate. So this is even lower. So that is showing you that we're going into now negative territory. So the US is shedding jobs right now. And as you can see, these kind of levels have only been seen during recessions. The last time, so apart from COVID, the last time we actually saw that was in 2008 and 2011. Okay, so it's not very normal type of chart to look at. So, and the only reason why it's not looking worse than what it is simply because they sent a lot of workers away back to Mexico and other countries and South and Central America. So the number of people looking for jobs is artificially lower than what it should be. Okay, if we hadn't had those that repatriation policy, that number would be much higher. Now, this chart will shows you again the number of people kind of like unemployed, as a percentage of the adult population. And again, this tells you pretty much the same story. So at these low levels, so you can see here, from 2009, all the way to so this is the crisis of 2008, 2009, and that number has gone steadily down. But we only seen these figures going up beyond that in periods where the economy is doing okay. Look at that 1995 to 2005. These numbers were pretty low, and then they just starting to get higher when we get into a recession. This is again the push with COVID, and we started pushing in levels that only seen during recessions. So the signs are out there. What's going on as well in terms of the primary deficit and US metrics. You can see now on the second chart, you can see the average weekly payrolls. These are the very weak. So 25, this is the percentile. So out of 100, the number is 25. So we're very low. We are the lowest quarter. So not quite, but just on the cusp of being on the lowest quarter between 0 and 25. So very weak. And also the disposable personal income is also in the second quartile, and so 34th percentile, which is again very low. Okay, so that tells you that, and these are kind of real figures as opposed to retail figures and appear that these are like nominal figures. Okay, so they just in dollars amount rather than so it's the amount of money in circulation does affect those figures a lot. So it's kind of like a scary picture, and we can see also here why we're looking at job figures, because the average weekly payrolls, which is the orange line, and the blue line is the consumer spending. So you can see that it goes hand in hand with work. Obviously, if you work, you earn money and then you can spend it. If you don't work, you don't earn money and you can't spend it. So this is why we look at that very carefully. So look at the times, for example, during the 2008 crisis. You can see that spending was higher than the weekly payrolls. What did that mean? That people were using their savings to live because they weren't earning enough. Okay, so these two, as you can see, most of the time they go hand in hand, because it just makes sense that people earn a wage and then they can go out and and spend as they wish the money that they earn. Okay, and this one as well. Whoops, you know what? I forgot what that is. Okay, we'll pass because I completely forgot what I wanted to. Or come back to me in a second. That we'll move on. Okay, so basically we're saying the job numbers have been pretty low, and it says already in the last speech by Jerome Powell, he was saying that they are a little bit less worried now about inflation, but they are more worried now about the job market. And the latest figures have been kind of like, obviously they must have known that those figures were around the corner to be released. And they were preparing, in a way, they were preparing the market for the shift in policy of the Fed. Now, we go into crypto. What can we see here? Obviously, since a couple of weeks ago, when at the end of August, when we had the big drop, when they made a new all-time high, and then price, created a. Let me just use another chart so I can show you more clearly. Just a second. Get another Bitcoin chart. Let's go this one. No, use another one. Bitstamp. There we go. Okay, so as you can see here, we're starting with a clean slate. Okay, so this is where demand was sitting, and I told you this. I told you this last time. And okay, if this held, because this is the last place, the last imbalance that we had in the chart is when we broke the previous all-time high, and this is the zone that propelled that move. So price has got a memory. Okay, markets know that the last time price got that low, those that bought Bitcoin made a lot of money. So it's only normal that at that price level, then there are people that are willing buyers. Okay, so they're talking about willing buyers against willing sellers in investments. So we try to ride the market sentiment so that we can go with the direction of the market. And what we had is that from the all-time high, we can see the kind of like the moves here. Okay, so that was the move going down. And so what do we look at? So when do we understand that the things are changing? Where's the first indication? We're on a daily chart here, by the way, so it's not like a short term or something that you got to look every 5 minutes. But this is the point where things change. Okay, because this point here is what is called a controlling swing high in trading. It means that it's the highest point because what do you expect in a trend? You expect to see, in this case, it's a downtrend. So we expect to see lower lows, lower highs, lower lows, lower highs, lower lows. What happens here? Oh, this is a higher high. It's higher than before. That's not supposed to happen in a downtrend. So this is the interruption of the downtrend. Okay, and then we have as the downtrend is interrupted, sometimes that translates into a sideways move. Sometimes it translates into an uptrend, and this is where we are. This is where we are today. Actually, let's take it from here. This is the last time. Today we don't know what this candle is going to do today, but this is the actual. Let's do it in green. Okay, so this is the actual uptrend that is happening right now. Okay, so and from a daily point of view, now we have closed, and this was on Wednesday. We are closed above this point, and this is so nice. I mean, it's almost like textbook. Okay, so what you would expect then, when price closes above, you expect to retrace to a demand that created this move, and to see that. I mean, I can see here, but it's not, if you're not trading, that wouldn't be very clear. Okay, so but if we go on to maybe a 1 hour chart. Really looking at 1 hour chart, probably I would have expected price to get, being honest with you, I would have expected price to retrace a little bit more. But one thing that you always have to, Bitcoin is very reactive. So often you hear in trading, or you're trading, resistance becomes support, and this is the case here. So price literally was, it's a good sign from the point of view of momentum, because price didn't have even to retrace to a level of demand. It simply touched again this point here, which was the previous resistance that we saw worked at the beginning of September. Okay, price, went down on the 1st of September. On the 5th, it got up to this point and then it was rejected. And then it happened again and it was rejected again. So on the third time of asking, it went through. So maybe we can have a look at it on even a smaller chart. But there's nothing there really. It's not always, I mean, the charts are, good. It's not necessarily, there's nothing here. I'm still retain that zone as, there's a little zone. Literally, you have to go to a 5-minute chart to find some short-term demand, which is here. But it's a very, very small trading zone for Bitcoin, only a few $100, but it shows you that there is good momentum in Bitcoin, because first of all, it's solidified at about 113.5 to 114, and now this morning as well it broke through and it went beyond 116. Okay, so the next point to watch, go back to the daily chart. literally now that we've interrupted this downtrend, I don't think we're going to have any problem going above this peak, although there might be some pushback because there's going to be beyond 117.5, there's going to be liquidations. Okay, this is where a lot of shorts would have put the line in the sand. Okay, and so what it's likely to happen is going to be some pushback if we like it's happening at the moment. You see, those we were trying this for the first time. It rarely happens on the first time, probably the second or the third. So and it could be very likely we could like inch up higher slowly, or it could happen on Wednesday when there is the interest rate announcement. But very probably beyond this point, there's going to be some liquidations, and there's nothing here. There's no support. There's no supply here to stop going above this point. Then the next stop is creating a new all-time high. Okay, so that's the at the moment the more likely. Nothing is for certain, but that's the more likely event right now. There's going to be some. Where is my pencil? Where is it? Why don't I have it in my? By the way, why don't let me just put my highlighter in my. Okay, so what I would expect to see. So I don't know exactly what happens today. We might have another move higher anyway, but I expect something like this. Okay, now it might take, I don't know how many days it will take. I mean, I don't have a crystal ball. Okay, but this is what I expect to see. There might be, a few more touches. Maybe, at that point there, there's incremental moves higher. And then, a decisive move that would move higher, and then a little bit of settling down, maybe a couple of days, and then a big move up, beyond this. I'm not quite sure exactly how far, but I expect it to probably, go somewhere near the 130,000 move. Again, guys, don't quote me necessarily for the length of time they will take to get there, but in terms of direction of travel, this is what I expect to happen. Now, let's look at a few bits of news. First of all, general terms, look at the couple of things that we look at the NUPL, net unrealized profit and loss, which is still standing at a very sedate, where are we? About 53 and a half. I remember the euphoria, the greed phase is above 75. Okay, so we're still, and the interesting thing is that, you know, the highest we had in this cycle was March 2024, where it got up to about 62. And that at that time the price was about 73,000. Not 70, yeah, about 73,000. So from then, Bitcoin has gone from 73 to 115, even 120, but the kind of like the excitement of the market has actually gone down rather than up. So it means that it's a very measured move. There is no greed driving this phase. It's just pretty normal because this is like pretty much institutional money coming in, and it comes in regularly. You know, just not big bursts and then panics and big bursts and panics. This is a more likely, similar to what happens in the stock market. You know, a little correction and a move up, a little correction and move up, and so on. So that's good. From the other one that we look at is the realized price chart, because again, this gives us an indication of, you know, when things turn around, where that bottom could be. So at the moment we are looking at the realized prices sitting at 53,100, and I'll tell you that beginning of the year we were at 40,000. So this year has already increased by 13,000. This is the average price that all the Bitcoin circulation have last moved. And obviously, each time a Bitcoin gets moved today, it gets moved 115,000. You know, so that average goes up every single week that the price is above that point. And so that means that below that point, the majority of Bitcoin holders will be holding Bitcoin at a loss. Okay, which generally, when you are holding something at a loss, you are very unlikely to part with it. You know, especially if you have had it in your portfolio for a while. Okay, so we can take this as a proxy in a way for where the bottom of the market will be, there or thereabouts. So you can see we can look at in 2022 when we were last below this line, and the market got down to kind of the low 16 at one point. I think it went down to 15, 15.9, 15.8, and the average was about 20. Okay, so the lowest the realized price has been, it was about 19.7. Okay, so within 2, 3, 4,000 of this price could be where the bottom of the bear market is. Now I expect this again, you know, if the expectations are confirmed and we may start a bear market towards like the second half of next year, or the third quarter, the fourth quarter of next year, that number probably would be, you know, well into the 70s. So to give you an idea as well, if you have kind of long-term investing or in Bitcoin, kind of like how to start, if you want to use any sort of leverage whatsoever, you need to be prepared, you know, for Bitcoin dropping to those sort of levels. Okay, so that's a one thing. Looking at again, as we're looking at institutions as usual, we look at the Bitcoin and Ethereum ETFs, and we can see like this week again. So this was last week. Okay, you can see we've got 3 red days and 2 green days. Let's turn it to US dollars actually. Okay, and this week was so far we've had 4 green days. Okay, so about, you know, 1.2, 1.5 billions, roughly 1.5, 1.6 billions flown back into the Bitcoin ETFs. Okay, and we're standing now at 56 billion since inception. And instead where are the ETFs? Oh, look, they even started listing this Solana ETFs. Although we haven't had where are they? But it's yeah, it's not it's not really worth looking at that, to be honest with you. So Ethereum ETFs again, as I was saying, So again, last week was a little bit of panic, so from the old coin market, the Ethereum, so there was some profit taken in Ethereum, 1, 2, 3, 4, 5, so about 4, 6, 8, 9, 900 million. Where this week we started green again, 44, 171, 113. So we're about 300 million in the positive. And we have total of about 13 billion since have flown into Ethereum since the ETFs were launched. Now, so there are lots of ETFs in the pipeline. Every week, we have a new SEC deadline, and so far they all been delayed. So this week was a Doge ETF. There was again pushed back because probably a lot of these coins have got similar narrative, and I think if one gets approved, probably all the other ones are going to get approved as well, because there isn't a big difference between the filings of the different ETFs. So it's not very likely that we're going to have just a single coin ETF that is approved and not others. Okay, so a couple of things. Where is it? Okay, so I know that I want to particularly scare you, but. Okay, so researchers uncover undetectable malware draining crypto browser wallets. Okay, so and it's sort of like almost undetectable. So we got to be very careful. And what I would recommend everybody do secure, do secure your wallets with a cold storage, with a Ledger, Trezor, or any other cold storage wallet that you can use, because browser wallets and software wallets are not safe. So I know that a lot of you in the community use Exodus. Be very careful. I'm only saying that, okay? I don't want to hear anybody that's actually lost, tens of thousands of dollars or more of crypto because they hadn't protected it properly. So be very careful. And I tell you again, generally these are through links. This particular thing was spread through job recruiter ads. Okay, so it could be anything, though. It could be any message or an email that you receive and you click on a link. So be extremely careful. And what's the easiest thing without going too complicated in buying the best online digital security is, if you can, simply use a separate computer for your crypto transactions. That's probably the most secure thing without involving too much spending money in, right, left, and center. So if you don't open emails with that computer, don't open texts, it can get infected. Just go to the places where you need to go to do your transactions and nothing else. So that's at least the first precautions that you can take. The second precaution, obviously, is using a cold storage wallet to hold your private key. So that means every transaction that you want to do online with your crypto, it needs to be approved by your physical USB based key that you use. Okay, so that's the one thing. And also, I wanted to show you some of the things I actually, when I was logged into my Ledger, there was a few screenshots that I thought might be interesting to share. There's a simple description, but sometimes says access your crypto. Your crypto assets are stored on the blockchain. You need a private key to access and manage them. Okay, so if somebody in anything say, give me your private key, then they're after your funds. Don't give anybody your private key. Okay, that's not something that you should be sharing. Your public key, yes, it's almost like you want somebody to send you something. You need to give them an address. That's your public key. But your private key stays private. This is why it's called private key. Then own your private key. Your private key is stored within your, in this case, this is a ledger, okay, your Nano X. You must be the only one to own it, to be in control of your money. Okay, simple enough. Stay offline. Okay, your Nano works as a cold storage wallet. This means it never exposes your private key online, even when you are using your ledger. Okay, and the last one, validate transactions. So in this case, we're talking about ledger. So I was actually initiating a new ledger wallet, a new ledger, the little thingy. Ledger Live allows you to buy, sell, manage, exchange, and earn crypto while remaining protected. Okay, you will validate every crypto transaction with your Nano, which is your, with this little thing here. Oops. Okay, so this is a ledger. Okay, and it is most of the time it's not connected to the internet anyway. Only when you want to authorize transaction. So this is an explanation why and this is not necessarily, you don't necessarily have to use a ledger, but this is why you have to use a hard wallet, a cold wallet, rather than a hot one. Okay, because in a hot one, all these things are on your computer. Okay, and if your computer gets infected, somebody could steal, your computer gets compromised, you might lose everything. And I've seen it happen before, more than once, even to people within the community. Okay, so be very careful and really pay attention to the security when you do crypto stuff. Okay, other crypto news. So that's pretty good. So what BlackRock wants to do, so bring ETFs onto the blockchain. This is what is called the RW. You heard that thing, RWA, real world assets. So this will be the first step of bringing trading in ETFs to. So if it goes on the blockchain, what does it mean? That these things are tradable 24 hours a day, 7 days a week, the same as crypto. So what's the next step that could happen after that? What about stocks and shares being on the blockchain? Again, tradable 24 hours a day, 7 days a week. So this is where we're going. This is the direction of travel. So don't get pushed out by panic, because the wave that is about to unleash on crypto is something on the scale that you have never seen before. Okay, so this is institutional money coming big into crypto. And if BlackRock, up to a few years ago, were thinking like Bitcoin is the devil, I was opening talking about this, saying this crypto stuff is rubbish, don't go anywhere near it. Well, they were planning something different behind the scenes, let's put it that way. So this is why you got to be very careful what people say. Just look at what they do, not what they say. Okay, and if you go back, I remember I got some clippings that I used to show of 2020, which is only 5 years ago. And first of all, you would have found it very difficult in 2020 to read on the normal press about crypto. Literally, you'll find a little article on page 25 or something like this, like 2 lines of Johnny they got all his crypto stolen or something like that, But there was very little reported about crypto. 5 years down the road, you can't open a newspaper without having, a crypto mention on several articles, and so this is a big move. Okay, so and they already obviously launched the most successful ETF ever, which is the Bitcoin ETF, the BlackRock Bitcoin ETF. They run a BUIDL called Digital Liquidity Fund, which is a tokenized money market that has gone over $2 billion in market value. So they like this. They can see the success that they've had with this strategy. They want to do more of it. Simple as that. And this is in a place where the regulators now are more willing to engage with crypto. So they're more friendly towards crypto. They've removed a lot of the obstacles, and there is now even a project crypto in place. So there's the design to explore how US markets could adopt the blockchain infrastructure. So both the SEC and the Commodity Futures Trading Commission, the CFTC, are studying how tokenized products could eventually trade around the clock. Okay, a structure that will mirror crypto's 24/7 nature. So this is what we're talking about. Actually, bring the the stocks, the ETFs, eventually the bonds onto the blockchain. You know how many trillion that is? Every day. How many trillions of trading volume every day that could go onto the crypto market? It's just insane. Insane, even if they, generate their own crypto blockchain to process those funds. The fact that they are using blockchain is like a green light for the majority of investors that see their advisors using it extensively. Other thing, so still talking about SEC, the Gary Gensler, the head of the SEC until recently, there was the last 5 years it was so much against crypto, was trying to make life difficult for everything. And now apparently now that they're looking into the documents of the SEC during his time, they just lost 1 year's worth of his text messages. They were supposed to keep all the communication and everything, but they can just lose. I'm sorry, we lost it. We can't show it to you. We can't show. They're talking about showing not us, but showing the superiors. This is quite grave. So it shows you how they were not in good faith, and the damage that they have done. Now they don't want to be responsible, held responsible for acting beyond their remit. But this is the world that we're living in. On other things that can it's, when I say that, if you want to make money in crypto, you don't necessarily have to go on to the latest thing. And this is the last bull market. Everybody was on to, the NFTs were everywhere. They were on the BBC, and everybody was talking about NFT. Christie's, one of the biggest auction houses in the world, even had a digital art department. Okay, but they've recently closed it because basically there's not much interest in it anymore. So I'm not saying the NFTs are dead, but they're saying as a fund, as an investor item. So we had NFTs, a few years ago. What's happening in this cycle? Meme coins have the same hype that NFT had a few years ago. So be careful of the fads. You can make money in crypto simply by staying with tried and tested blockchains and coins without having to go into the next best thing that you got to get in at the ground on the ground floor. Don't make that mistake, please. They already have too much of our money in the past few years. You don't need to give them anymore. And that's the other thing. Okay, so as the price of Bitcoin went down from over 120 to 107 and so on, and literally in the last few months, there's been a big accumulation by whales. So these are kind of like wallets that own in excess of 10 bitcoins, okay, from 10 to 10,000 bitcoins. They have actually accumulated an extra 200,000 bitcoins, and there was evidence especially in the past, that when there was that drop after the all-time high, and it dropped all the way to 107, there were some really strange moves, kind of like late on a Friday night or during weekend when there was low volume, there would be like huge selling orders put in place. And it was seen as I could see, because I've been in this game for a while, but I could see as an open attempt to scare the market and pressurize people to sell the Bitcoin so they could buy it cheaper. Is exactly what happened. So retail owners, like small owners of Bitcoin, have sold off at that level, and the big holders have bought it. So thank you very much for buying that for me. And now that's how they make their money. They wait for price to drop to their price level rather than buy at market value. And sometimes they play this 30 games. Okay, it will happen. It will happen. Okay, so I think we're coming, we're almost at the end of it anyway. But we're coming to the end of what I wanted to show you. So I'll stop sharing. And let's take a few questions. And by the way, Jonathan, okay, please drop your link as well. Or remind, most of you are kind of have been here before, but Jonathan runs a Cardano-based session at the end of this. I know that some of you have come already, done an hour before this, have done this, so you can do it like 2 hours. There's no two without three. Just like you can have the whole lot, 3 in a row. Okay, anybody wants to ask any questions?
Luca, I was just curious, have you heard of nodes?
Yeah, what nodes? You need to be a bit specific.
Yeah, like buying Bitcoin and putting it on a node rather than on a ledger or something like that.
Okay, but this is where have you heard of that?
Just the various people that I've met, just talking roughly, saying that it's like a he went through, I think it's called the Bitcoin Way or something. They obviously say, like, for security and things like that, having your own hardware, software, and node is protection, and obviously
What
sovereignty,
would
I
be the
think.
reason? What would be the reason for you to do it?
I'm just learning. I haven't actually gone down the path of a lot of crypto and trying to be quite honest, crypto is a very, I feel, volatile, risky market. So just trying to work out, obviously, if there is a safe-ish option.
Okay, okay, all right.
Yeah.
We got to be very careful here because it's very easy to be scammed. So this is why I got my red flags were raised pretty much as soon as you mentioned node. Okay, because you know what a Bitcoin node is. So basically, you running, you contribute, you put your computer to work for the network. So you help run Bitcoin. Now you wouldn't normally do that unless you are very savvy and you know what you're doing, and you have also there is a cost in in hardware for doing that. If you get people that say, give us your Bitcoins and we'll put them on the node, that will give you some sort of rewards, run as fast as you can. Because that's a scam, guaranteed. 100%. So I don't know, Jonathan, I don't know if you want to pitch into that, but this is how I see it. Okay, because Bitcoin mining at the moment is business really for the big boys. It's not something that you can do with a few hundred dollars worth of Bitcoin. But Jonathan, I'll yeah, if you want to add anything to that, I'll.
Yeah, so particularly with Bitcoin, you need a computer that can run calculations very, very fast. And so that you need a big, expensive computer. And that's how you win the right to mint new Bitcoin. And that's how a miner will earn new Bitcoin. So unless you're running a big computer with very cheap power, because it's very expensive on your power bills to run a computer like that, you're not going to be making money with Bitcoin. So anybody says they are, probably some kind of scam. So yeah, what you're looking to do is, so go on.
My understanding was the node was to hold it. So essentially, I was to purchase the. I haven't obviously gone into it properly, but just a very quick was getting the hardware, the software, and the node, which you organize or you have essentially is a place where it gets held. So no one else has access to it, essentially. Not to do mining to earn more Bitcoin, but so your Bitcoin was safe, essentially, is how I understood it. But I could be wrong because I haven't obviously been in crypto, this space, for very long, hence the reason I asked the question.
And people will call things different names, so it could be a misunderstanding. But so I run an air-gapped machine. So I don't know if I've spoken about that phrase at all. So you're on a computer that's not connected to the internet, and you do your crypto transactions from that on that, sign them on an online computer. So that could be what they're at, but chances are it just seems very convoluted. Your best bet every single time is just to get a hardware wallet. A Ledger, well, I would recommend a Trezor. I use a Keystone wallet. Ledger is very good as well. These hardware wallets are simple single devices. They've got one purpose, and they do that really well. They're extremely hard to hack, like almost impossible. So if you want to store Bitcoin, store any crypto, hardware wallet's the best place to do it. And just be very cautious of enthusiast groups. You don't know what you don't know until someone scammed you.
I've got 6 more minutes for this call, and then I'll come cook dinner.
Oh, my dinner. Sorry.
Okay. Awesome. Thank you.
No
That's all
problem.
right. You're welcome. And by the way, it's also a matter of cost. I mean, if you had a few million in Bitcoins, it might be worth considering some, if you have, a few $1,000s of Bitcoin or 10,000, it's really not worth the expense in any case, because it is expensive. It would be expensive anyway.
Yeah. I guess I was probably looking at it as like a bank solution, because at the moment, obviously, the way banks are, it's like your money is definitely, I don't feel safe somewhat in there. So it was kind of looking for an alternate solution where you could kind of have it separate. But
it's still on the thing. So Kath, your coins are still on the blockchain. Whatever arrangement you have is to protect your private key, which is basically the password that you need to do anything with those assets. Okay, so that's the thing. Okay, you can be as complicated as you want in the description of it, but the reality is that the coins are on the blockchain anyway. You protect the private key, and the other thing you can do, so if somebody wants to really get into this rabbit hole, you can protect your address. So it's it's more difficult to find in a way, but the reality is that so as long as you keep your private key safe, as safe as you can, then you're okay. And don't get too hung up on having a big expense to protect us. Something that's not considerable enough to warrant that expense.
And when you're talking about securing a private key, probably the best way to do it is to buy a sheet of metal and some metal stamps, hammer it into that metal stamp plate, and then just bury the plate in your back garden. And if the world collapses, we go through thermonuclear war, as long as you can get back and dig up that plate and restart the internet, then you've got access to your Bitcoin again.
I love it. Thank you.
That's all right. Okay, anybody else? We got like 4 minutes left, really. But I've got calls back to back after that, so we can go over time. Anybody? Hey, Carol.
Just talking about the potential change in the share market, moving on to blockchain and everything down the track, is there any investment or any exchanges that you would consider investing, buying some of their shares to position yourself to take advantage of that change in our world?
So it depends, because it depends what kind of technology they're looking at. So the big winner would be the blockchain that is used for those transactions. Blockchain or blockchains, we don't know. So yeah, I mean, I'm of the mind that security will be, obviously, security and speed will be very, very important. So who knows where those transactions will be secured? I can't see happening on Ethereum and Ethereum-based chains. So the more I look at it, the more Cardano looks good, to be honest with you. But it could be some other chain as well. Obviously, the kind of the flavor of the month, the kind of the one they all talk about, Solana. It's not as attractive for me for this sort of market, probably, because they need more solidity than that. But yeah, until when they start talking about the the platform that will be built on Solana, Cardano, Ethereum, I don't know. There's going to be obviously a big uptick in the technology that's used, but we don't know which one that is going to be now. Yeah, and by the way, so the other thing is that I don't know who will be allowed to if it is on the blockchain, I can assume that then exchanges will be allowed to trade those as well. So that could be also we've seen recently that exchange tokens have done pretty well. So the recent one, the more recent one was OKX that launched OKB that really jumped up a lot, and that could be like a strategy could be buying a few of the tokens from exchanges, like BNB, OKX, and all the ones from the main exchanges could benefit from this, because it means that they could get access to a lot more trading volume. And recently, Robinhood bought Bitstamp, and now there are more transactions on Bitstamp than there are on Robinhood itself. So that tells you the direction of travel from that point of view. Guys, I will need to love you and leave you today, as it's 10 o'clock. So I wish you all a fantastic weekend, and I will see you again next week. Okay, bright-eyed and bushy-tailed. All right.